Hello and welcome to the Investing Show. We're here to help you make good investment decisions. I'm Abraham Okusanya, the founder of Timeline, the company on a mission to help people retire with confidence. In the first episode, we'll be discussing Neil Woodford, the star fund manager who spectacularly fell to earth. What are the lessons for investors?
I've been interviewing two people who know more about the Woodford scandal than anyone else. They're journalists Owen Walker from the FT and David Ricketts from Financial News. Both have written books on the subject and reported on it regularly over the last 3 years. I started by asking them, how big a scandal was this?
This is a huge scandal, particularly in financial services. I mean, if we look back at some of the other scandals that have taken place, if you look at the number of people that have been affected by the Woodford scandal, so around about 300,000 retail investors, that's a huge number of people nursing significant losses. Also, the sums of money involved as well. I mean, we're looking at losses already around about £1 billion at least.
This is the UK's best known fund manager of his generation, one of the biggest funds in Britain. And hundreds of thousands of people invested their hard-earned savings, their retirement pots, with this man, with his funds, in expectation of getting an outcome which would really see them through into retirement. And what happened with the equity income fund, its suspension and the £1 billion plus of losses these people will have made absolute life-changing consequences for them.
David, the books that you've both written on this subject show that there were in fact a number of guilty players, if you like. To what extent is it all down to Woodford, and to what extent were other players responsible for what happened?
The man himself, he was somebody who was, as Owen's alluded to, this rock star fund manager. He built this incredible career while he was at Invesco over a 20-year period. He generated superior returns, if you like, compared to his peers, his rivals, and investors who invested money in his fund during the late 80s were richly rewarded with returns over the 25 years that he was at that firm. He started to stray away from that sort of mainstream kind of investment philosophy where he looked at investing in very large liquid companies and started to favour the smaller maybe startup companies that were harder to trade, harder to buy and sell shares in. His style drift, if you like, towards the end of his career at Invesco, and particularly when he set up his new firm and his new fund in 2014 when he struck out on his own, that was one thing that maybe led to the downfall. There are a host of other players involved in this as well. There's Hargreaves Lansdown, who again we can talk a bit more about, how they championed Neil Woodford's fund right from the outset. The heavy promotion the fund was given during the offer period. This was a fund that went on to become the most successful new fund launch in British history. So retail investors were encouraged to invest large sums of money in this fund. Peter Hargreaves, the co-founder of Hargreaves Lansdown, telling investors he was putting his own money in that fund. Mark Dampier, the head of investment research at Hargreaves Lansdown at the time, again, someone else who plugged that fund very heavily. So Hargreaves Lansdown continued to promote that fund even during a period where performance started to turn, and there are a lot of questions around why that was the case. But I think the biggest question mark, and perhaps the player that gets a lot of attention, is Link, so the authorised corporate director, the entity that was overseeing Woodford's main fund, checking, or should have been checking, that he was adhering to the compliance, the rules around investment management. That was the entity that was answerable to the FCA. And that's the entity that now a lot of questions are being asked about, and I think.
So, Owen, we saw this drift away from the style that had been successful for Neil Woodford in the past, and you could say he started to focus on an area that he really had no experience or very little experience in, and yes, he was partly to blame for that, but surely there were other people who should have, seen the warning signs, if you like, that he was actually straying off piste.
When Woodford launched his new business in 2014, he went out there and one of the big attractions to a lot of people was how transparent it was going to be. Unlike a lot of other fund managers, he was going to show every single investment he made within his funds. A lot of other fund managers will only show you the top 10 holdings. So what he was doing was in plain sight from the off. You know, his investments in these small, unlisted, unquoted companies, these small, very thinly traded companies, it was in full view. He would produce these documents monthly, which would show every single holding. At the very beginning, they were very small, and most people probably didn't get to that page in the documentation. Though if you're somebody like, for example, Hargreaves Lansdown, who is heavily promoting these funds, it is your job to be looking at those documents and scrutinizing every single holding and looking at the liquidity of each of those holdings and stress testing to make sure that if, as we saw happened, there is a run on the fund, people are pulling money out, he'll be forced to sell his most traded companies, the FTSE 100 companies, the blue chips he'd been most closely associated with. He would then be left with this rump of small cap, unquoted companies, which he would really struggle to sell. So it would be the likes of the fund promoters, the intermediaries, the financial advisors who were promoting his funds to their clients. They should have been aware of this.
How much sympathy do you both have for the investors involved? I mean, you could say, playing devil's advocate, that they should have been aware of the risks. How much sympathy do you have?
Well, I think it's very difficult as a retail investor now. I mean, there's a lot of emphasis on you, the individual, to make your own investment decisions, particularly when it comes to retirement. So, the DC pension model, for example, places more emphasis on the risk on the individual. And obviously, there is an environment now where there is more DIY investment platforms, and people are taking financial matters into their own hands because it's cheap, it's easy to do. But what I would say is that people, taking financial decisions need to do their research, and I think that's the key thing. This is one of the lessons I think that needs to be learned from all this, is that despite the information that's out there, you do need to kind of do your research and make sure there are no kind of biases or any kind of hidden agendas involved in why a fund is being promoted. Neil Woodford's fund was promoted on that best buy list even at a time when Hargreaves Lansdown had concerns about the performance and were starting to ask questions about the number of unquoted companies he was holding. So there's a question to be asked there about, well, why is a fund buy list, which is so influential, it drives a lot of money into funds, because that is a list that investors go to because they trust the platform that's providing it to have done the background research. I do have sympathy for those investors that relied on those buy lists to some extent, because they felt that the research had been done to a high enough standard. And having spoken to people that worked at Hargreaves Lansdown in the research for my book, the impression I got was that the expectation was that he would just carry on doing what he was doing at Invesco. Now, if you go and speak to any other new fund manager coming into the market, they will tell you that they have to jump through a lot of hoops before they get put onto a best buy list. You need a track record of at least 3 years before you're even looked at. So launching a new fund should not necessarily be seen as carrying on what you're doing at your old shop.
Woodford was heavily promoted in the financial media. And there's a problem here, isn't there? Because journalists, and I'm a journalist myself, we need stories, and Woodford was a story.
And this taps into this whole idea of star fund managers. And this culture really came about in, say, the 80s and 90s, the early 2000s. We're all financial journalists. You go in, you're writing stories about numbers, but you want a character, you want a story, you want some colour in there. And Neil Woodford provided that in spades. He was down to earth in many ways. He lived a lifestyle. He was a multimillionaire, but he lived a lifestyle maybe that we might imagine if we came into money. He bought fast cars, big places in the countryside. Later, got into a lifestyle of fast horses. Maybe I wouldn't have bought the horses, but that's beside the point. So he kind of lived this lifestyle, but also the way he spoke to journalists was very much matter-of-factly. He could explain what was his portfolio, what his strategy was, in very easy to understand terms. And that really came across compared to maybe a lot of the stuffier, the more bookier fund managers that we're more used to dealing with. So his personality became the story as well. So the financial press certainly built him up, and this story of a guy who could read the runes, he could find out what was going on, and he could see into the future. And I think he really believed that his own press, because in the dying days of his own business, he was convinced and hell-bent, having spoken to people he worked with, that his course would see him through. But that star fund manager culture, it really relies on individuals and their own powers in the investment markets. Now, if you speak to any statistician, this is kind of eventually there will be a reversion to mean. You cannot have a winning streak that goes on for years without at some point spectacularly collapsing. That's just the way the rules of economics work. So while you may get some managers who are a bit bumpier, you do get these others whose strategies dictate that they go on really great runs for several years and they just come crashing down to earth. And that was very much Woodford's style, was that. So what you do get often with the star fund managers is they do have these streaks, and then it comes to an end and people say, well, why do we go in with this guy in the first place? Because it all went spectacularly wrong. And we saw a lot of those stories happening in the 2010s. And I think now we're kind of moving away from that model.
But certainly now what you are seeing is more of a team-based approach. I think if you talk to a lot of asset managers in London, here in the city, they will emphasise the team player kind of mentality of their firms now rather than the key individuals. And I think they've learnt from not only Woodford, but if we go back several years ago to PIMCO, for example, when Bill Gross, who managed tens of billions of dollars over one of their flagship funds, as soon as he left PIMCO, they lost billions of dollars, just went out the firm overnight. So again, a key man risk, if you like, by putting all the assets with one person.
So let's pause the interview there and see what Abraham has to say. Hi, Abraham.
Hi.
With the possible exception of PPI then, was this the UK's biggest financial mis-selling scandal?
It's right up there with the mortgage endowment and package account scandals in terms of magnitude. The big difference is this one had a single individual or organization at its center.
And do you agree with David Ricketts when he says that the industry has learnt lessons from Woodford?
Well, I'm afraid I don't share David's optimism. The cult of the star fund manager is still very much alive and well. Fund platforms continue to promote best buy fund lists like they did before the scandal. There's hardly a week you don't read something in the press about some colorful character, fund manager, trying to beat the market by taking bigger risks.
Okay, we'll hear more from Abraham later, but first back to that interview with Owen Walker and David Ricketts. You say, David, that asset managers have learnt from Woodford, and let's hope they have. The crucial thing, of course, is have investors learn from Woodford. Owen, is this a story that will just carry on repeating itself again and again?
I would like to hope not. I think we do have a natural human instinct to put our faith in individuals, and there's certainly very strong investor traits to want to catch a star on the way up, which means that often people will start investing in a fund past its ascension and actually probably when it's on its way down. And you gave some good examples there, because it's only really when these people have accumulated their year-long or 2-year-long streak and they're kind of outdoing the market by 20-30%, that's when people really take a notice. But you'd probably say that's probably the time to bail on those funds, because it can't continue forever. So hopefully we will be moving to a period where those sorts of individuals and names will be promoted less. But unfortunately, I think it is human instinct that will probably never escape the kind of the lure of the star and the person who's really excelling, when that's probably a warning sign to maybe that's the time to bail.
I'm very interested to hear what both of you think about the FCA's role in this. First of all, the role it played in the scandal itself and stopping it happening, if you like, but also the very, very slow response that we've seen since then. What do you make of that, Owen?
Well, I think the FCA's flaws were there. They pre-existed Woodford's fund launch in 2014. So even if you go back a year or so, when he decided to launch his business, he was already under investigation by the FCA for the funds that he was running, among other funds, at Invesco Perpetual. And at the time, the FCA fined Invesco Perpetual £18.6 million, which was the biggest fine for a fund management company in the UK at the time. And his funds were one of those that the FCA had been scrutinising for the amount of risk they were exposing investors to. So that is the context through which Woodford then, just a few months later, appealed to the FCA to launch his new business, which it gave him the green light in record time. And so you really have to wonder what happened at that point. The FCA has just put the UK's best known fund manager through the ringer over his funds, and then is letting him set up a new business in record time. Much smaller business, much smaller compliance team to sit around him. So you can trace the FCA's failings right from those decisions in early 2014. A year later, two of the founders of Woodford's new business quit after falling out with Woodford and his business partner, Craig Newman. Now, as part of they were very high profile roles in the industry, and as part of that, they were required to have exit interviews with the FCA and talk about some of the issues that they had seen within the business. The FCA did not act on those issues. This was an early red flag a year after it launched. The first time it started actively looking at Woodford's business was 18 months later, when coincidentally it happened to come across a conflict of interest in the way that some of the companies that Woodford was investing in, the way they were valued. Yet again, this didn't really prompt much interest within the FCA. You have to go forward to 2018, when the FCA actually started looking at Woodford's business more closely, because he was breaching this so-called trash ratio, where 10% of his portfolio was invested in unquoted assets, and it had breached that level on a couple of occasions. And that's only when the FCA took a very keen interest in the business.
The FCA investigation into the circumstances surrounding the suspension of the equity income fund launched soon after June 2019, when the announcement was made by Link that the fund would be suspended. So yeah, we're coming up to 3 years now, and there is still no final report from the FCA, no answers for the hundreds of thousands of people that are still locked in that fund. Unfortunately, a lot of the investors in that fund, time is not on their side. I'm sure that there are a lot of retirees who have sadly passed away during the time it has taken the FCA to conclude its investigation and put together a report, because they deserve answers. And unfortunately for some, they will never get the answers that they wanted or deserved. Now, having spoken to people, lawyers who used to work at the FCA, but also who are involved in sort of representing firms that are subject to investigations by the regulator, the news is, unfortunately, investors have a longer wait than perhaps they were expecting. So the FCA updated the market in December last year, saying it had gathered all the evidence it needed, it had conducted all the witness statements it needed to carry out its research, and now it's putting together its report. This is just the start. Unfortunately, it's going to take several months, if not years, before we have a final verdict from the FCA, because the FCA will need to put together reports. They'll need to send those reports out to the interested parties, whether that's Link or Woodford. Those interested parties will then need to form their own responses and representations. There's a chance for the firms to have an oral representation at the FCA. So there is a whole other process that gets kick-started now. And yeah, speaking to people that are involved in this kind of process, it can take even up to 2 years. So unfortunately for investors, there is another long wait ahead.
Owen, we hear rumours that Neil Woodford wants to start up again in fund management. Do you think it'll happen?
He gave an incredible interview in the period that both of our books came out last year, and I have my suspicions about the timing of that. And he talked about how sorry he was for certain areas, the problems within his business, but he also talked about setting up a new business in Jersey, and that this was going to be a new business, wasn't going to focus on retail investors, it was going to be for professional and institutional investors. Now, the story came out. There was a lot of interest in it, and then cunning journalists like myself and colleagues phoned up the regulator in Jersey and said, "So what's going on? Is Woodford setting up?" And they said, "Well, actually, we haven't received any applications yet, and he shouldn't view us as a backdoor into restarting his business in the UK." So it quickly came to light that actually this kind of big plan of a business in Jersey, that wasn't going to happen. We then saw that he had started applications in the Cayman Islands, and then after that in Delaware. So he's moving across the Atlantic, and then it all just went very quiet for a year or so. And actually, even though he did set up some companies, several of the individuals who are named as directors of those businesses have recently left and gone on to do other things.
Yeah, I think it's very difficult to see how the Woodford name isn't tainted, particularly in the retail investment arena here in the UK. As Owen said, the regulator has already said, that to do business here in the UK, you need the regulatory permissions in order to do that. I think it's still very much, let's wait and see what the FCA have to report on their investigation into the suspension before maybe they give the green light to Woodford to manage money again. Obviously, there are investors out there who feel that Woodford still has something to offer, because he obviously sees there as a market out there for him to exploit and to win business. So he's advising a firm called Okusanya Research based in the US. So they've given him a mandate to help them with some of their research. But I think in terms of running retail money, those days are well and truly over.
Abraham, you have to feel sorry for Woodford investors, don't you? They must be tearing their hair out at the lack of progress with the FCA investigation.
Absolutely. 3 years on, and those investors still don't have an answer from the FCA in terms of actually what went wrong, and no one's been held to account.
So for you, what's the single most important takeaway for investors from this whole sorry business?
This is yet another reason why index investing is a better way for most people putting money away for retirement and for their financial future. The biggest advantage is there's no reliance on any single individual to pick stocks. To put it another way, there's no trying to find the proverbial needle in the haystack. Just buy the haystack.
So there you have it. Thank you to Abraham, and thank you to Owen Walker and David Ricketts.
So, you've heard our opinions, but what did you make of our latest interviews? Please send us your views. From all of us here, thank you for joining us, and goodbye.